Thank you and welcome everybody. Thanks for dialing into this webinar, and I'm delighted to say Giles from Ovum will be speaking about us. He'll be talking for the first 30 minutes or so. He wrote a great report which is available on the ACI website if you don't have access to it. Really looking at the payment switch market, and you're probably an active follower of the retail payment space. And this is the first report which is covering our space in probably about 3 or 4 years from any analyst firm. So it's been long overdue. Giles has done a fantastic job really looking at the market, what's driving the market, what will the market look like, and also doing some vendor evaluations as well. So over to yourself, Giles.
All right, perfect. Thank you, Paul. For those of you who don't know who Ovum is, so Ovum is a UK-based analyst firm specialized in the telecoms and technology sectors. Our research is portfolio subdivided into horizontal and vertical market streams across quite a few vertical market segments. But please visit us online for more information at ovum.com. Now, today's webinar, as Paul mentioned, is based on the findings of a recent vendor comparison report we published in late 2013 titled Ovum Decision Matrix, Selecting an Electronic Retail Payment Switch Platform. It's a bit of a mouthful, but this report, really what it does is it provides a vendor ranking, right, categorized the key players within the market as market leaders, market challengers, and market followers. Now, these rankings are based on an extensive series of RFI documentation requests with vendors and a series of intensive briefing sessions to discuss the ins and outs, really, of each specific platform. So these vendors are then scored and ranked along 3 primary criteria, which we then use to create an overall ranking. The key criteria within that is the market impact of the platform, a technology assessment, and the execution capabilities of the vendor. So vendors are ranked on a comparative scaled basis. So what this means then is that even though they may all score highly in certain areas, they're still ranked and compared against each other. Now, in an area like the payment switch market, this is very critical, as many of the products out there, they work very well, they do what they say on the tin. However, it's those differences which really makes them stand apart from each other. As the market becomes so much more competitive over time, it's those differences where they really stand apart from each other. So this webinar, my half of the webinar, is divided into 2 key sections. So the first looks at key drivers in the changing payment switch market, and the second looks more specifically at base 24 EPS and Postillion's positioning within the market. So just to give it a bit of context, now globally, the payments market has been and continues to be in a period of quite intensive growth. The bubble chart here shows the historic and forecast growth, both in the total payment card market globally, with the bubble sizes here denoting the total market size in each region by the number of cards in issue. So what we see here is that even in mature markets, overall card numbers are growing. And although card growth is slowing from a previous high, so again, if you look at the x-axis, that shows the historic growth, the y-axis is the forecast growth. The fact is, though, that card growth is still very high. It's still increasing. In some markets, such as China, Central Asia, it still remains, 14, 15, 16% and higher. Even in very mature markets, looking specifically at Western Europe, North America, historically, the largest markets amongst the most dynamic markets, even here, markets which are, by all definitions, very mature, if not even saturated, growth is still there. And this is just in terms of the actual card numbers, let alone the actual volume and value of transactions. So the key issue here is really, payments everywhere across the board continue to grow. The overall growth in electronic payments is really being driven by 3 primary drivers, most of which are relatively straightforward. So first of all, there's economic development in emerging regions. So what we're seeing there is an increase in payments in new markets. As, the infrastructure develops, financial access improves, and financial literacy continues to grow. Some elements such as social welfare programs in the likes of Brazil, where payments are made using card-based technologies, or even using biometrics to access the poor in South Africa. It's another area where payment technologies are developing, and building very rapidly on what is historically very limited infrastructure. Secondly, the other major drivers, one of the more visible ones is definitely the technological change affecting the market. So, everything from the likes of online spending with cards alongside new technologies, the very high technologies such as mobile and contactless payments, they're really moving to displace cash more and more, particularly as more merchants now accept non-cash-based payments of whatever form. And again, this is one with the technological change. It's still early days, but it's driving investment within payments, and it's still driving usage of payments. And that's when that's only going to increase with time as these new technologies take hold and become more widely available to consumers. Most critically, though, however, perhaps most critical of all, is very much the shift in cultural behaviors. And what we're really seeing across all markets is a growing willingness from consumers to make non-cash-based transactions. So really, one of the key indicators here is the rapid growth of debit-based spending, even for very low-value transactions, on a very high-frequency basis. So really, this is the use of cards for day-to-day use. That traditional conception of cards, of electronic payments being really based around credit cards, for high-value transactions, which may not have occurred that frequently, is completely a thing of the past now. Consumers are willing to use a payment card, for a pack of chewing gum or even at the likes of McDonald's. But, this is a huge increase in volume and type of transactions, and there's absolutely no indications that this is going to slip back in any way anytime soon as consumers become more comfortable and have more places to spend using digital and electronic means. They're going to keep using it. There's no putting the genie back into the bottle. But what this means then, in terms of this payment growth and payment innovation, is that it's driving the need for flexibility amongst banks and merchants alike. So it's this flexibility that really remains quite a critical component driving demand in wider payment switch technology. So for banks and merchants alike, they have a growing need for future-proofing. When we see things like the development of new payment methods, new transaction techniques, they're constantly evolving. Right? So even a couple of years ago, the assumption was that certain technologies were on a very set path to wide market acceptance, things like NFC or contactless chip cards. But what's happening very quickly is, we're seeing new technologies. We're seeing new platforms, new types, things like biometrics, QR codes, kind of cloud-based payments. Are rapidly developing, rapidly evolving. For many banks and payment providers of whatever kind, it's providing the infrastructure that's capable of handling that. It's becoming more complex. So being able to react to that in a rapid, very agile method is increasingly in demand. Secondly, we're seeing increased need, for configurability, really driven by business users. Now, this really helps banks and other providers to meet shifting requirements, particularly for things like, regulatory issues. But even things, for instance, like, kind of deeper segmentation of consumers, of different types of transactions, of loyalty programs and what have you. It's the ability to develop that, to configure that on the fly, not necessarily in a long-winded process driven by developers, but driven by the actual business users themselves to rapidly implement changes and shifts as required. Within that as well, and I think this is a very interesting element that perhaps several years ago people would not have predicted, it's very much the growth of new transaction types at the point of sale, or even within banks or within numerous environments. So what I mean by that is, it's more than just retail payments now for many banks and for many merchants. It's not just about being able to accept a card payment. What we're seeing is the development of a full range of much more complex transactions, including full-scale banking services at the point of sale, through the likes of things like Banco de Walmart in South America. This is one of those areas that will keep increasing. It's that point of sale is viewed increasingly as really critical to merchant and even banks' interaction with the consumer, and that customer engagement is a very critical element to wider growth strategies and what's becoming an increasingly complex market. But the central point there, being able to interact with consumers at that point of sale, is through being able to deliver new services, to do it much more rapidly, much more smoothly, in a very fast, agile environment. So as a result of this payments evolution, what we're seeing now as well is a It's an evolution of the underlying switching needs of financial institutions, which by necessity are becoming much more complex. So, for instance, whereas traditional switching was a fairly direct ATM and point-of-sale requirement, very much a one-to-one environment, the development of new channels and types of transactions, and this includes things like prepaid, P2P, mobile, online, e-billing, et cetera. It's really complicated the architecture of many financial institutions, and subsequently, this has really greatly increased costs of both running and maintaining these systems, but let alone giving them the scope and capabilities for rapid digital transformation, right, to develop new services in an agile environment. Creating this new modern switching, that is future-proof, that is more configurable, is very much a necessity, and increasingly so as the market only increasingly becomes complex. So, in reaction to the shift in needs, what the market's seen within the payment switch space is very much the evolution of the payments hub platform, or payment hub-like capabilities, of which, in many instances, the switch is just one component. So these hubs act very much as a central focal point for all payment transactions. So what that means is they provide a simplified and more cost-effective means of interacting between both the core layer and the front layer of banking architecture, and a means of dealing with an increasingly diversified payments landscape. Many switch platforms are now being marketed and built for their hub-like capabilities. Now, this is one that, not all banks have a hub. It's very much a long-term end goal for many. However, a hub or having hub-like capabilities is something which is very much on the roadmap, or at least, within the planning phase of many banks and institutions out there today. Given time, it will, Ovum believes, become, the de facto standard within the market. So, payments transformation within the bank is hence now being driven by a desire to consolidate existing legacy infrastructure, but move more towards this payments hub platform. So the benefits of moving from a siloed legacy payment switch, which is expensive to maintain, complex, not flexible, is pretty self-evident. In comparison to that, a centralized payments hub platform is very much increasingly of interest to banks. It offers a greater level of flexibility, much deeper configuration capabilities, but including a more modular design approach. So this adds to the ability to rapidly launch new payment services, and it's really set to become a standard over time. As I keep saying, on the back of that increase in payments diversification across the market. Now, what's interesting is the appetite for tactical switch replacements with added hub-like capabilities is also growing. So what we're seeing is, in an ideal environment, many banks today, from everyone we've spoken to, would love to be able to just have a greenfield site, introduce something new, do a very slick, smooth, seamless installation of this new amazing hub capability within the bank. However, legacy infrastructure exists. It's not easy to move. It's difficult to replace. It's often, a very long, laborious, expensive process that needs quite a buy-in beforehand. However, what we're seeing more and more now is the development of more of a wraparound approach to developing the hub. Right? So it's the introduction of hub-like capabilities around the legacy infrastructure. But what's interesting there is, we're seeing even where it's being deployed as a wraparound system, replacing that legacy switch still remains very much an end goal. There is very much an increasing demand for these hub-like capabilities, but banks really need to reduce costs and remain competitive simultaneously. So it's those different implementation methods which are going to become increasingly an option, increasingly, we believe, in use by many banks in the market today. So as a result of these trends, the appetite for payments transformation overhaul is very high. So this chart here is based on Ovum's annual ICT Enterprise Insight Survey, which we interviewed several thousand ICT executives globally to ask them about a range of issues within financial services and their intentions for the next 18 months. So looking at this, we see that, on a global average, 42% of respondents reported they were investing in payments transformation. Now, a surprising 30% globally reported they were investing in payments transformation for legacy systems, while only 12% were focused on greenfield new installations. For me, this really highlights the fact that new payment hub and switch platforms they're not being installed only by new players, but they really represent a shift amongst all categories of payment providers. Even looking across the different markets, the different geographies out there, see, there's still a very strong demand for payment transformation of that legacy architecture, including in markets where there's been more recent development, such as, Central Asia, China, and Southeast Asia. But even here, that appetite's still high, above 30% or so. Even North America, surprisingly, actually shows a fairly high level of new installations relative to overall transformations. But, other markets such as Central and Eastern Europe, MEA, Latin America, it's that overall level of investment within payment systems is remaining high. It's back on the agenda, very much from what we're seeing. It's payments is seen as a focal point for future growth, not just within the transaction business itself, but across, the wider banking services. As a result of these drivers, the payment switch market is really becoming much more competitive. There's more vendors out there, really upping their game. New platforms are evolving. So how does ACI fit into this environment? So this here is very much the Ovum Decision Matrix. This is quite a nice summary slide here. And what we see here is that both Base24, EPS, and Postilion are ranked as market leaders. So as I mentioned at the beginning, vendors are categorized as market leaders, market challengers, or market followers based on a combination of their technology, which we see here on the x-axis on the bubble diagram, or by the execution capabilities shown here on the y-axis, or alongside their overall market impact, which is shown here by the bubble size. So again, just to stress this point I mentioned earlier, a very key element I want to highlight is the fact that all of these major switch platforms on the market today, they perform very well. They provide a high level of capability to their clients. If you look, this scale here has been adjusted. It's 6.4 to 7.8 out of a 10-point scale. So within that technology assessment, it's a very close gap. Those differences are still very important, but where we start seeing a lot more differences within the overall execution capabilities, but also within just the level of market impact that these players are having. A switch is how many people have described it to me, but it's those small differences which remain very critical, and it's those differences which will only become more critical over time as the payments market continues to shift and the demands on payments infrastructure continues to develop and change. So Base24 EPS scored the highest overall based on our three metrics here, and really builds on the considerable legacy of Base24 Classic. Postilion also scored very highly here and is held quite immensely by its rankings by its proven track record and extensive installed base. So looking more specifically at the breakdown of Base24 EPS by these three variables, market impact, technology assessment, and execution assessment, this really highlights the fact that along most subcategories, Base24 ranks well above average. On market impact, for instance, we see that in terms of the switch platform's global market presence, scale and market growth, it scores well above the overall market average. While in terms of the technology assessment, Base24 EPS remains highly competitive, scoring above average in all categories except for upgrade management, which nonetheless still remains extremely strong, particularly compared to some other players within the market. Unsurprisingly, considering ACI's significant positioning in the switch market, to put it mildly, its execution capabilities also remain extremely high, with notably strong training resources and very strong partner networks in place. So migration support remains marginally below average. The reason for this, I would say, is very much due to the fact that most migrations to date are legacy Base24 Classic systems. And being a newer platform, it remains relatively less tested in the field than a few competing platforms. But I think given time, this will increase. I'm sure Paul will disagree with me on that. But given time, I think those numbers would probably show an increase in a shift. So really, but overall, Base24, it really earns and maintains its market-leading position, really very much due to the strength of its technology, on the back of its configurability and flexibility, and very much the strong support it still gains from ACI. Being relatively new to the market, its positioning, we feel, is really likely to only increase over time as its resilience and capabilities get more of a proven track record on the ground. I know very much that Paul and everyone at ACI will say, it's been very tested, and it has been. From all the feedback we've had, it's performing very well. But, banks are a very conservative bunch. They like having that proven track record. They like seeing what's worked, improving resilient. So we think, given time base 24, EPS will very likely, maintain what base 24 classic is and will probably remain very much quite a dominant player within the industry. Postilion, by contrast, presents a slightly different picture, but it's still very much noteworthy for the scale of its market impact and the very high levels of support it receives from ACI. In terms of this market's impact, Postilion scored the highest of any vendor platform analyzed in the ODM under its total global market presence, really quite off the scales compared to everything else we were seeing. It still remains a very widely used and robust platform across many markets globally. It's very much a tried and tested product. In terms of technology, there's no denying that Postilion is a slightly older system. And as such, it does face some stiff competition from newer platforms, including base 24 EPS, but also some of the very small niche new players now entering the space. But what I would really highlight here is the fact that, despite its age, Postilion still remains near or on par with the market average, right, which is thrown off quite a bit by the number of new players which are out there. And in many ways, we feel it very much does set the bar for the wider market. So with the strong product roadmap still very much in effect, we feel there does still remain very strong scope for Postilion's technology assessment score to improve over time with future iterations and further developments of it. As with base 24 EPS, Postilion benefits greatly from significant support from ACI, particularly for its training resources and global partner network. So overall, Postilion remains still very much in a very strong position as a counterpoint to base 24 EPS, with more of a focus on a broader range of deployments by size, including smaller to medium-sized deployments. But its broad global base and track record of resilience is very much indicative of its continued market presence. And so for that reason, it very much remains the market leader in our perspective. So at that initial phase, I'm going to zip through that a bit quickly, but do we have any questions? Any questions that you'd like to cover here, Paul?
Yeah, so there's a couple of comments there, Giles. So one, you talked about the payment hub. In our experience as a vendor, of course, we've seen a lot of activity on the wholesale side, but not as much on the retail side. Are you suggesting that's going to be changing now?
Yes, absolutely. From what we've seen, yes, the wholesale space has been much more active in the payment hub environment for many years. Now, what's been very interesting in payments, there's been so much discussion of, transformation, of, the road to digital evolution within the broader payment sphere, but then the global financial crisis happened, right? So a lot of these big plans kind of took a little bit of a back burner. For a lot of payment providers, it was very much a batten down the hatches, kind of emergency situation of just, kind of hold on for dear life and hope they kind of ride it out through the storm. The storm has passed now, right? And that payments innovation, that payment development, it's still going. If anything, it's gaining speed. It's increasing more and more. And what we're seeing here is, there's very much a growing appetite, for investing within that payment infrastructure. I think banks are very aware of the fact that they've, been holding back a bit over the last few years, due to a variety of very understandable reasons. But now is very much seen as quite a critical point, to make those investments, to develop those payment hubs, not only to rapidly, introduce these new services, to create a more agile environment, to be more, kind of reactive to, and proactive to the shifts happening amongst consumers and, clients of all kinds. But it's very much, it's a strategic tactical issue now, right? It's not just so much an infrastructure question that we need to make sure our payments stand up. Now it's very much, there is a growing appetite for developing the systems beyond that, but also reducing costs. Payments in many markets are facing cost pressures like never before. Things like interchange regulations and shifting patterns of spending away from credit over to debit. It's a shift in the actual revenue models for payment providers, right? So reducing those costs where they can, including in things like maintaining older legacy infrastructure, is very much on the table now within the retail space. So, I mean, it's a bit of a long-winded answer to your question, but yes, absolutely.
So I guess there's a follow-up question of, and you had that nice bar chart earlier in the slides, but particularly thinking, looking at the report, you had a figure in there, I think it was figure 3, looking at banks planning to transform or install the new systems, and kind of bridging off the comment you said about the payment hubs. Are you seeing increased activity? And it may not be a payment hub installation, but payment switches, ATM driving, mobile banking, things like that. Absolutely. Those investments are definitely increasing, and it's across the board, right? It's payments is very much seen as quite a critical component. I mean, one thing that came up from our research, which we focus on across many of our reports within Ovum, is the fact there's still very much a driver for that digital transformation side, right? So it's those new methods of engaging with consumers. But it's also very much, there's a growing awareness that, clients of all kinds, not even necessarily just amongst retail consumers, but even within the corporate space and what have you, expectations are changing, demands are shifting, right? Kind of consumer willingness, client willingness to hold still, to, kind of put up with services which may be a bit clunky or slower or not as effective, or, which fall over, when things go wrong. The ease with which consumers, clients of all kinds are actually switching their providers, including in financial services, is increasing, right? Is increasing very rapidly. So, that's very much where... Sorry, Giles, I was going to ask, do you see a difference between the, what I call the developed markets and emerging markets, or is it kind of the same trend?
It's funny, it's actually pretty similar across the two. I mean, there's definitely more of a shift to, introducing, there's more opportunity to develop, an entirely clean greenfield site within those emerging markets. What we're seeing is, in emerging markets with payments, it's very interesting. They're not following a very traditional payment path of just, kind of doing what, mature markets were doing 15, 20 years ago. They're leapfrogging, right? They're bypassing that very quickly. One of the things we do see there is, even within those markets, there's a much greater willingness from consumers to use these new payment tools as they evolve. There's much less of the reluctance and skepticism to use new payment types. So there's very much a drive and a push to introduce more of these payment tools, right? More of these services. And in many of these markets, this has quite a very transformative effect, for things like P2P transactions or, driving even very unusual types of transactions at the point of sale. Right, so things like offering a wider range of banking services through the till, reaching the unbanked, and that sort of thing. So these banks, in those emerging markets, they're very much learning the lessons. They're seeing what's going on globally, and they're implementing those changes in advance. If anything, in many ways, they're actually more future-proof than many, many players in more developed markets. At the same time, saying that in mature markets where there is that legacy infrastructure. There's still very much, this is definitely, I think, on the agenda now to drive that shift to innovation, right? To help improve their capabilities, reduce costs. Absolutely. It's, it's very much a global phenomenon, I'd say.
No, that makes sense. So they were all the questions I had for now, Giles. So if I'll become the presenter here quickly and just say a quick few words about one of our solutions based for UPS. So thanks, Giles. Thanks very much.
Yep.
So here we go. This is the ACI section, and as Giles pointed out, the one thing I disagree with is the yet to be proven comment about base rate for UPS. So to give context, we have about 250 base 24 classic customers. We have about 90 or 95 base 24 UPS customers. So that's acknowledging not quite there as yet as base 24, but getting there. So we're about a little over a third of the way there. So what I want to do is kind of talk about some of the challenges which our customers tell us that they have, and really they say there's three big things which are driving all this. Is that they have a lot of new regulations, particularly if you think of wiping away interchange revenue here in the United States with the Durbin Amendment, or the multilateral interchange fees discussion or legal wrangling which has been going on in the European Union. So a bunch of regulations have to face rising costs supporting existing systems across the entire banks, and Giles talked about that quite a bit. And also the need to increase new revenues by providing value-added services. So this whole thing of, we want to cross-sell to our customers, we want to be intimate with our customers, it's all driving towards, increasing new revenues. And as Giles pointed out, the way of the world which we've known for the last 15 or 20 years is changing, driven by one of the big forces that the banks tell us is millennials. So when I first started looking at this a few years ago and this idea started to get bandied about, it's like, millennials don't really know anything, but they start trends. If you think the iPhone was, 7 years old now, the way that the smartphones in general have revolutionized banking and payments has really been driven by millennials' quick adoption of technology. And if you think of it, mobile technology is probably the fastest adoption of any banking technology ever. You think ATMs took about 20 years to really penetrate. Debit cards took a little bit less time. Online banking, probably for about 10 years' time. So we're sitting about 5 years for real mobile banking, and started to really penetrate every customer base. So revenues, increasing costs, and increasing revenues through innovative services, providing value to the customers, regulation, and costs as well. So what we're saying to our customers is that, hey, you need to start a virtuous cycle. And it kind of goes along with what Giles was saying. You have to provide new products, new services to do that. And how you do that is you kind of got to free up existing resources, maybe make some wise choices from an investment standpoint, but bringing new products to market, whether it's enhancing the ATM where you can do, mobile cash withdrawal. So you start a mobile transaction, then you actually withdraw the cash from the ATM, or if I want to send Giles $100, I send him a text message, he goes to his ATM and gets it. Or it could be things of like fraud alerts, where you are providing a service where if a card not present transaction takes place, you have to have verification for it. We have a customer called OTP who are based in Hungary. They actually started making revenues from this because they provided a base set of services, and enhanced services cost customers money, which they're more than willing to pay for. And you think of P2P, there's a little case study I'll talk about in a little while about ABSA. Exactly what I talked about, the ATM. You could send money via text message and withdraw from the ATM, or you can send money via email address. So you can bypass the whole network infrastructure, if you will, and send money directly. So we think this is going to engender lots of customer loyalty, making them more ripe for cross-selling. If you think of the average bank has about average customer has about 2.5 or 3 products in the bank. The market-leading ones, such as Wells Fargo, their customers have about 7 or 8 products. And you think, what type of products can it be? It could be your basic checking or current account, a savings account, a credit card, a college savings account, retirement, mortgage, home equity loan, car loan, things like. There's a ton of products which could be sold, and banks in general would probably admit they don't do a great job of cross-selling. So we think that providing new services, providing customer a consistent view of the bank to them, will increase customer loyalty, will enable margin expansion, and with greater margins they can increase their investments and really target some new value-added services. So it is a virtuous cycle, but that's really easy in theory. So there's these things which Giles touched upon, and I'll give the ACI spin, is that the costs are soaring based on supporting some of the legacy systems out there. And it's not just Base24, there are other vendors who have significant legacy installs in the marketplace, and also a lot of homegrown technology as well. The need to be flexible, to move into new geographies, move into new verticals, and provide these new services. And this revenue, it doesn't just come easily anymore. So if you think of the business model has changed dramatically in the last 5 to 7 years of, nice, fat, healthy profits from interchange rates have gone in the last probably 7 or 8 years. Any notion of making money from interest rates has gone. So what this means is that new payment services that customers are actually willing to pay for have to be developed. And although banks may argue that they are true innovators, they're typically followers rather than innovators. There's a few which are super fast followers, but as Giles commented, banks are conservative by nature and have to be shown the way, how things prove before they go and dip the toe in the water. Some banks are faster than others, but in general, they are followers rather than innovators. So the ACI Solution, Base Rate for EPS is part of the ACI Consumer Payment Solution, which offers everything from payment processing, customer lifecycle management, disputes, fraud detection, real-time payments. It's super high volume. 300,000 merchants have been acquired on it. Over 50 million cards have been issued, and 60 million transactions a day has been proven last year. And regardless of the channel where the payment is coming from, with what Giles said, it's been transformed from card payments to ATM to P2P to mobile point of sale. Regardless of the channel, we're channel agnostic, and also increasingly, no matter the payment instrument. So that's a Magstripe or EMV card, which is pretty standard for the last 10 years. But in the last couple of years, mobile phone, and most recently with the latest release of Base Rate for EPS, you can pay by your email address or any other identifier which the bank assigns to you. So Base Rate for EPS, as I said, is part of the consumer payment solution. So what makes EPS unique? So there's 4 things which we really think help make it unique. Is that it's been proven to reduce costs. It enables customers to get to market up to 50% faster. There's a bunch of features and functions in there which will help generate new revenues and allows our customers to stay innovative. So I'm going to go through each one of them and actually prove it, and not just make these claims. So from a flexibility standpoint, in the latest release of Base Rate for EPS, we've added in new development toolkits. So if you are a keen industry observer, we acquired an Australian company called Distra about 18 or 19 months ago now. What we've done, we've taken their super flexible technology, embedded it into a lot of our solutions, one of them being Base Rate for EPS. And these development toolkits really let our customers build new network interfaces or interfaces to point-of-sale systems or ATMs or any other endpoints. And based on our testing, it's about 50% faster than they've been able to do before. And we've also really went from the lines of, hey, the market's going in the way of configuration. Let's make the system as configurable as possible, and our customers, the feedback we've got from straight away is really complimentary. And lastly, one of the new things we've added is we really saw it enabled the system, really exposing some of the business services. So it can be called upon from let's say a balance inquiry, for example. It's not just from an ATM, it could be from the branch system or from the mobile phone. It goes into Base Rate for EPS, invokes that service, and what really that enables the banks to do is get rid of some redundant services or coding in other areas of the bank, and really integrate Base Rate for EPS into these complex banking systems. So we've done a survey probably about October, September time of last year, and this was prior to the release of the latest release of Base Rate for EPS. And this large international network and this small case study is available on our website. They said, hey, we really like the new system. It helps us rapidly deploy new services that our customers want. And these development toolkits, which you have in place already, really help enable us to customize the system and really differentiate themselves in the marketplace. So they said, hey, 90% of the functionality is probably going to be the same from bank to bank or network to network, but that extra 10% of flexibility which EPS provides to customize it and develop new services really enables us to differentiate themselves. So from a pure costing perspective, going about one of the large global banks which we surveyed, when they came in from a different provider, they switched over to base mouthful EPS. It took them about 9 months, and they had up to 74% in cost savings. So that's a phenomenal amount. No matter which bank you are, and we said, hey, we can replace your system. That could be any type of system, and we'll save you 74% of your annual costs compared to what you had previously. That's pretty appealing to the bank. So this was a large global bank. They have operations in many countries, and this was for their U.S. operation. And right now, with the success based on that, we're looking to expand our footprint. So what can it do for you? So what EPS can do, or base mouthful EPS, can help reduce costs is there's a couple of things. So with the new system, reducing the integration effort. So we really think that the SOA enablement of the new release will really help reduce integration efforts into existing banking systems. But it's not just the new stuff. So it's the cheaper development through configuration rather than coding, the reduced long-term maintenance costs of building your own system and maintaining it with ACI. You get long-term maintenance included as part of your package. So the 3 times a year network interface updates are included. The Global Health 24 support is included. So for the general fixes which are needed. But other than that, there's we go head to head on anyone doing faster processing, but also the reduced risk of fraud. So within base mouthful EPS, there's about 7 to 10, depending on the type of transaction, checks that they do. So is the merchant category code suspicious? Things like that. Is it coming from a place where 2 transactions are coming from 2 completely different geographies for the same card within a window of time? So really looking to help reduce our customers' fraud. And one of the new features rolling out in the new release, based on some of the work we've done with our French customers, was a notion of rolling limits. So what rolling limits and the fraudsters found out was that if you do 6 PIN attempts in a 24-hour window, you will get prevented. But at the end of 24 hours, it kind of resets the clock. So what we've done now is sort of say, hey, well, let's do some rolling limits. Let the banks configure the limits based on themselves. So it could be PIN attempts in a 7-day rolling window, or it could be cash withdrawals in a 48-hour window. So really let the banks assess their own appetite for risk and put in the features in place to really help reduce some of the fraud. And of course, we have pre-certified integration with ACI Proactive Risk Manager, which is the premier card fraud detection system. So then from a revenue perspective, and I've talked about banks have had revenue wiped away. So what are we helped in doing? So the big one with the new release of base mouthful EPS is the fact that you can develop non-card-based systems. And that sounds pretty blunt, pretty generic, so let me explain for a second. So as now any bank or any customer or prospect taking base mouthful EPS, they'll be able to assign any type of ID to that customer and which will enable them to make a payment based on the ID, make and receive a payment. So immediately the head starts spinning up. It could be a mobile phone, it could be an email address, it could be a bank account number. So in theory, they could set up 2 things. One would be P2P payments, in the old-fashioned sense of I'm sending a payment to Giles or sending a payment to another person. Or in more complex, if they had a relationship with the customer, with the retailers, they could bypass the existing networks, and the retailers could have a direct connection to the banks and skirt all of the existing networks and associated costs, and the banks could start getting some of the interchange revenue back. So that's a big strategic goal. I'd encourage you to go out to our website, aciworldwide.com/disruption, to learn more about that. But anyway, back to some of the other features and functionalities within Basement for VPS. So being able to develop the new channels and interfaces new channel and network interfaces faster means you can get revenue quicker. You can develop new interfaces to mobile payments, and with this new non-card-based payments, you can start accepting mobile phone payments. So lots of innovative services in there. And one of the use cases we had was a large US bank moved into new markets, all developed from one solution. So this was, I believe it was a Middle Eastern bank, my memory serves me correct. They wanted to move into different markets from using the same solution, offering the same services, but to new people. And they started developing their interfaces a lot quicker. A mid-sized US bank said ACI transformed their business, and this was with the ability to quickly bring to market new payment services compared to their previous vendor. So this fast time to market, being able to develop new and innovative services to market is a story we keep hearing time and time again from our customer base. Then lastly, from an innovation perspective, so innovation in my mind goes hand in hand with revenue. So I'll talk about what ABSA did in South Africa here in a second, but some of the things which our customers are deploying. So there's one of them which is a fantastic, it's pretty obscure, and I would never think of it, is IPO subscriptions at the ATM. So one of our customers, I believe it's in the UAE, you can actually subscribe to IPOs at their ATM. You go up, they have a cool interface, you go on there and for any hot new tech companies being floated in the Middle Eastern market, you can subscribe to the IPO at the ATM. SMS-based payments, ATM-based payments, starting a transaction at the mobile phone, completing it at the ATM. And some of the more traditional ones, such as fraud alerting, transaction alerting, a lot of the new features and functions are developed in hand with the customers, or they're doing it themselves and looking for product support to help take it on. So if you go to the ACI Excellence Awards found on our website, every year we have about 15 to 20 submissions and winners. So I would encourage you to go out there, and there's probably about 5 or 6 every year for Base24. So one of the ones a few years ago, and there's a nice nifty video about it, about ABSA. So what they wanted to do was really tap in, extend their existing payment systems, tap into the new revenue opportunities for the developed markets, and really start delivering payments to underserved and unbanked markets. So what they've done was I've mentioned it a couple of times. So they said, let's go to mobile phone, let's target the unbanked, and let's start getting them into the formal banking system. That was their overall goal. So what they've done was, in conjunction with ACI and Base24PS, what they'd done was made a system which would allow anyone to send a text message, any ABSA customer send a text message to another person outside of the formal banking system. They would alert ABSA that this was happening, so the person on the other end would receive 2 text messages, one from, say, me, then one from ABSA Bank. They'd take the 2 text messages to an ABSA location, and they'd be able to withdraw their money that way. So it'd be a verification code from me, then a verification code from ABSA. So this is pretty innovative. This is about 3 years old, so they were doing about 120 transactions per month, which isn't huge when you compare to the millions based on cards, but growing in between 10 and 15% monthly. And what they started to do was convert some of them non-banked customers into formal banking relationships now. So they're really proud of it. They have a nice video out on our website, so I'd encourage you to go out there. So this notion of reduced IT costs, increasing revenue, more flexible and innovative services. So all going to tackle on 3 big challenges I stated at the start, which kind of align quite well with what Giles was saying. The banks need to reduce their costs. They need to, they're facing relentless pressure from regulations, which is forcing them to review their business models and also look at ways of driving new revenues. And it's all being driven from this, this piece of technology called mobile phones is really disrupting the innovation, and also the systems out there in the marketplace. As Giles said, banks are conservative in nature, so moving towards new business model, new technology is a frightening prospect for some. So what we say when we talk to our banks is that typically they're moving from an ACI to ACI solution, or from a vendor solution to an ACI solution. And we've done this thing many times before. Of the 90 or 95 EPS customers, there's, I think, about 50 or 60% have actually came from Basement 4 Classic. So we do have the expertise in-house for help making the migrations. So I'll just summarize here a couple of points. So based on the study of our Basement 4 EPS customers, of what are the things which do really help them do? So really help increase the revenues, provide functionality to increase revenues. We enable faster innovation, but also help maintain compliance. And the one of the things which I was really proud about was that about 65% of the customers say that the best thing about working with ACI is the expertise which we bring. So that's been knocked around the halls here in Omaha and across the world of something that we should be proud of, and something we should start leveraging more and more often, of the expertise we have in-house. How can we help our customers make the best of their system? So that's all we had time for today, so thank you for dialing in. And if there's any follow-up questions for either myself or Giles, we can be reached. My email address is paul.mcmeekin, which is spelled McMeekin, @aciworldwide.com, and I look forward to continuing the conversation soon.